Hello, welcome to this Ned Davis Research Podcast, where we will help you see the signals. My name is Brian Sanborn, NDR's Global Head of Investment Solutions. In this episode, we'll be speaking with NDR's Chief Economist, Alejandra Grindal, regarding growth and inflation forecasts for the world's largest economies. Alejandra, how do you approach creating a long-term view for global economies, and what are your summary findings?
Well, thanks for having me. I'd love to share that. So in our analysis, we focused on the world's largest economies, so specifically the US, the eurozone, China, and Japan. And this is pretty relevant because these four economies combined account for nearly 2/3 of global GDP and actually 83% of global market capitalization. So it just gives them a pretty outsized influence on US, developed international, and emerging market equities. And then what we then did is we assessed these economies on a comparative basis. Sometimes that's what matters. And over the next 3 to 5 years, growth and inflation, these economies, we think will be shaped by demographic and labor force trends, one of my favorite subjects, AI investment and its impact on productivity, monetary and fiscal policy, energy shocks, of course, and susceptibility to recession. For the US, we expect a slow growth, low inflation scenario, resulting in continued healthy absolute equity market performance. For developed international, and as I said, we specifically focused on the eurozone and Japan, we expect above trend growth and low inflation, resulting in reasonable absolute performance, but likely mixed performance versus the US and emerging markets. Now, for emerging markets, including China, we do expect relatively stronger growth and low inflation scenario. And that results in a strong absolute performance and actually likely outperforming the US and other developed markets over that longer term horizon.
What is your long-term view on the labor force across global economies?
Sure. So, the labor force is a key driver of long-term economic growth. Just holding all else constant, the more people in an economy that is producing and consuming, the greater its output. That's just the way it works. And when you combine that with productivity growth, so this is how effectively that labor is utilized, labor force growth helps determine an economy's potential real GDP growth. This is just its long-term sustainable real GDP growth. Now, in terms of labor availability, the US just has a clear advantage. Its working age population continues to grow at a really strong pace, and it's expected to do so even over the next 10 to 15 years. On the other hand, low fertility rates in Europe, Japan, and China, and this is just going back decades and decades, combined with what would typically have been a greater aversion to immigration, actually point to outright declines in working age population over the next 3 to 5 years. But one thing to point out is China has invested heavily through foreign direct investment in neighboring Asian economies. So we kind of see this as a way in which China can outsource part of its labor force growth, even though its internal one isn't doing quite as well. And this will in turn support its favorable long-term outlook of not just China, but also emerging markets. Now, beyond the size of working age population, labor force participation is almost as important. It's the folks that are working and willing to work out of that working age total. And this dynamic has been the primary driver behind China's falling participation rate. And it's just because it's been aging at such a rapid pace. As people get older and older, participation tends to go down. The US, however, has also experienced a long-term decline in participation, but some of it could be chalked down to population aging, as well as younger individuals remaining in school longer. But I think what's actually quite interesting is that participation, on the other hand, has been trending much higher in Japan. And this is even when you include the older population. And a lot of this is due to Abenomics. You may recall he went in power over a decade ago, really tried to change things around. And we actually saw prime age participation rise to a record high. And it is among the highest in the developed world. And a lot of it is just supported by a large increase in female labor force participation. So already there, just make it easier to work. And then similar to Japan, labor force participation among folks ages 15 to 64 in the eurozone has also climbed to new highs, and again, supported by rising female participation and immigration.
How is AI impacting the long-term economic outlook?
It's a great question. I mean, I would say right now, AI investment, and I would say for a few more years to come, it is directly affecting US and Chinese growth to a greater extent. But we do expect adoption and productivity gains to be pretty broad based. AI related spending has been most prominent in the US. If you look at non residential fixed investment or capital expenditures, we like to call that CapEx. It's been growing at an extraordinary pace in the US since late 2022, and especially when you compare this to the eurozone and Japan. In fact, high-tech spending associated with AI has been the primary driver. In fact, it's been accounting for more than 1/3 of total CapEx, and that's actually a record share. As the originator of major technological innovations, and this is typically the case, the US is likely to experience the productivity benefits just a little sooner than these other economies. China has also taken a more active role in moving up the value chain and establishing itself as a global AI leader. Relative to the US, China also benefits from lower input costs. So these are things like labor and land for data center development. And so as a result, Chinese productivity growth has actually begun to improve. And we think it's because of this, following numerous years of decline.
Alejandra, thank you for your insights. NDR clients can read Alejandra's research notes through NDR's subscription products. The indicators Alejandra and the research team developed for our subscription service are also used in our model portfolios, which are available for direct delivery on TAMPs like Amplify, as well as ETFs. For more information on NDR, we encourage you to visit ndr.com. Also, for those listening in audio-only mode, video versions, including the charts of See the Signals, are available by going to info.ndr.com/ndr-signals. Thank you for joining us as we help you to see the signals. So long.